Hey, guess where we are? We're at class again. Where am I? Are you guys ready for the semester to be over?
Yeah.
The analogy I gave to one of my other classes is, when you were a kid, did you ever have a friend over to spend the night, and they came over Friday night and you had all sorts of fun and you stayed up late, and then they spent the night, then Saturday morning you had all sorts of fun with this kid, and then they stayed for lunch, and then it went into the afternoon, and towards about the middle of the afternoon you were kind of ready for this kid to go home. Did you ever have that? I feel like in that analogy, I'm the kid that you're kind of ready to go on home. Is that true? So kind of getting a little tired of me. Jokes aren't as funny, but we only have, I think, about 4 or 5 more of these lectures, and then we are done. So let's go ahead and dive right in. I didn't give you that much homework, did I? Okay. And today we're going to work on some stuff in class, so you won't have to listen to me yak too much. So let's go ahead, and I believe that we had started exercise 22-1. Is that correct? And we had done January. Whoops, let me switch that over to the document cam. Okay. This is the one we're doing right here. Okay. Now, this is a situation where, well, let's just take a look at it. Kayak Company budgeted the following cash receipts, excluding cash from loans received, and cash disbursements, excluding cash disbursements for loans and interest payments for the first 3 months of the next year. According to a credit agreement with the company bank, Kayak promises to have a minimum cash balance of $30,000 at each month end. Okay? In return, the bank has agreed that the company can borrow up to $150,000 at an annual interest rate of 12%, paid on the last day of each month. We talked about how an annual interest rate of 12% is a monthly interest rate of 1%. The interest is computed based on the beginning balance of the loan for the month. The company has a cash balance of $30,000 and a loan balance of $60,000 at January 1. Okay? And we talked about why the bank has a vested interest in making sure that we have enough cash in our checking account so that we can conduct operations for our business, right? Okay? And I think where last we had left this situation, we had completed January. Is that correct? We had completed January. All right. So let's go ahead and continue on. And these problems, you have to do chronologically, right? You have to work your way completely through January before you do anything in February. Okay? So let's, what is the beginning cash balance? See if I can, let me go ahead. You can see that title. Make sure you title that thing up, but I don't want it taking up screen space. So, okay. All right. What is the beginning balance of cash for February? Well, it's the ending balance of cash for January. Now, don't make a mistake and put the loan balance. That's not the ending cash balance for January, okay? The ending cash balance for January is $30,000, okay? So this is $30,000, okay? What are the cash receipts for February? $400,000. Okay? So this is the sum of that, right? Okay. What are the cash disbursements?
$350,000.
$350,000, right? Now, do we have some interest expense?
Yep.
Whoops, I think I already typed this in. Maybe not. Okay. February, and that is computed how?
10,600.
We take 10,600, is that correct? Times 1%. Is that right?
Yeah.
And that is 106. Is that correct?
106.
It's 106 exactly, isn't it?
Yeah.
Okay. All right, so now we have our preliminary cash balance, which will be this number minus this number minus this number, and we have 79894. Is that correct? All right. So we have I have this highlighted because this is where we have that discussion with ourselves. Do we have at least $30,000 in our account?
Mm-hmm. Yep.
Yes. Okay, that's good. We don't have to borrow anything. Can we afford to pay back some loan?
Yeah.
Yes. Now, how much loan can we pay back? Well, we can actually pay back the whole thing, can't we? At least what we owe at this point, right? So, let's do that. Okay, we can pay back that $10,600 because that is what we owe. And what is our new ending cash balance?
69294.
Our ending cash is
Is that correct?
Yep.
69,294. And what's our ending loan balance?
0.
0. Okay, good. All right, any questions on February? What's the beginning balance of March?
69294.
What are the cash receipts? 450,000, right? So the total cash available is 519,294. The cash disbursements are 525,000. Okay. What's our interest expense?
0.
We don't have any because there's no loan balance, right? You pay your interest based on the loan balance at the beginning of the month, so we don't have any interest expense. So what is our preliminary cash balance? Negative 5706. Wah, wah, wah. Right? Well, we're supposed to have at least 30,000 in there, right? And we have negative 5706. Okay? So, how much do we have to borrow? How much do we have to borrow to bring us up to a positive 30,000?
35,706.
35,706, is that correct? Okay. So this is like a line of credit that we have with the bank. It's
put
there
that
if we need to draw on it.
in the repayment part there.
Oh, thank you. Thank you, Henry. Okay, yeah, I put on the wrong line. This is not the repayment of a loan. This is a, what do we want to call this? Additional loan from bank. Okay? So the additional loan from the bank is 35,706. Is that right?
Yep.
Okay. So now we have our ending cash balance of 30,000. Is that correct? Make sense? And what is our ending loan balance as of the end of March?
35,706.
So there we go. Correct? It's kind of a good, this is a good problem to work through. Good problem to work through in regards to budgeting. We'll do another one in here in class in a little bit. Okay? And of course, make sure you title that thing up so that if you give it to somebody, they know what they're actually looking at. Okay? All right? Okay, any questions? Yes, sir. Luke.
Do companies always just like take out loans like that frequently on a monthly basis regarding their budget?
That's a good question. What we have here is the question he asked is, do companies always act in this manner? Do they always just, because maybe it seems odd that you're taking out loans one month, repaying loans the next. This is kind of a line of credit situation. This isn't so much taking out a loan like you might be used to for a student loan or for an automobile purchase or a land purchase. This is a line of credit that you can draw on to give you cash for your to provide cash for your operations. So yeah, this is pretty typical. You have a line of credit that you are either drawing on or perhaps paying back to minimize your interest expense. Okay, because you have to realize that there's a lot of companies that their busiest months might be the months that they have the least amount of cash, right? Okay. Because if they're selling things on credit, they won't get it till the next month, yet they have a lot of employees to pay, they have a lot of vendors to pay, and those sort of things, right? Okay, good question. So yeah, this is a little different situation from just taking out a loan that we had talked about with the loan, the long-term notes payable. Good question. All right, any other questions? Okay, that's it for exercise 22.1. Let's take a look at quick study. Was it 22.5? Alrighty. Let's take a look. Quick study 22.5. Let's see where that is. Is this Lighthouse Company? Okay. All right. Lighthouse Company anticipates total sales for June and July of $420,000 and $398,000 respectively. Cash sales are normally 60% of total sales. Okay, well, if cash sales are 60% of total sales, credit sales are what percent of total sales? 40. Of the credit sales, 20% are collected in the same month as the sale, 70% are collected during the first month after the sale, and the remaining 10% are collected in the second month. Determine the amount of accounts receivable reported on the company's budgeted balance sheet as of July 31st. Okay? All right, we can do that. Let's take a look. All right. Now, this is kind of one of those. Well, first of all, did anybody get the answer? You got a answer or an answer. You don't know if it's the answer. What'd you get?
388,240.
No, but that's all right. I'm glad you did it. I'm glad you worked on your homework. Anybody get a different answer?
144,160.
144,160. That is.
That's what I got.
That is. Yeah. Now everybody's going. Yeah, that's what I got too.
Double that.
Yeah. Okay. Let's take a look. Let's take a look at this. All right. Let's analyze this thing. Okay, let's take a look at our months. We're going to look at June and July. Okay, let me make sure that's on there. I can zoom in a little bit too. Whoops, wrong way. Okay, June and July. What are our total sales for those months?
420,000 and 398,000.
$420,000 and $398,000. Correct?
Yes.
Okay, what are our credit sales? You correctly told me that if cash sales are 60% of total sales, then credit sales are 40%, right? So 40% times 420,000 is $168,000. And 40% times 398,000 is $159,200. You with me? Okay. Now, let's analyze the collection pattern of our receivables, okay? It says 20% are collected in the same month as the sale, 70% are collected during the first month after the sale, and the remaining 10% are collected in the second month. So it's a 20, 70, 10, right? So for June, it's 20%, 70%, 10%, 20% in June, right?
Scoot over.
Pardon?
You're off the screen, whatever you just wrote.
A little bit. Oh, thank you. 20% in June, 70% in July, and 10% in August, correct? Okay, for July, it's the same 20%, 70%, 10%, right? But it's 20% in July, 70% in August, 10% in September. Is that correct? Now we have to ask ourselves, what are we trying to solve here? What are they asking for? We're used to asking about cash receipts, but we're not asking about cash receipts, are we? We're asking what? We are asking AR at what date?
July 31st.
We are asking what is our accounts receivable at July 31st? Okay? Well, so my question to you is this. For June, 20% came in June, 70% came in July. So what is the, let me see what I'm going to call this column. Percent still uncollected at July 31st?
10%.
Yeah, what is the percent still uncollected at July 31st of these June sales? That came in June, that came in during July, so it's 10%, isn't it? Is that correct? All right, so that's 10%. Okay. Same question for July sales. What is the percent still uncollected at July 31st? Well, this came in July, but these amounts are going to come in August and September, correct? So the percent still uncollected is 80%. You with me? Everybody see how we got that? So now we're going to say the amount still uncollected at July 31st. That would be 10% times 168,000, which is 16,800, and 80% times 159,200, which is, oh, let me do that in my head. I think it's 127,360. The total of those is 144,160. Now, what is that? Let's title that up. Estimated accounts receivable at July 31st. You with me? So that is the computation of budgeted accounts receivable balance as of July 31st. Okay, hopefully I wasn't too messy for you there. Does that make sense, guys? Okay, does that make sense? All right. It makes me wish that I had another one that we could work on in class. I do have one. So what I want to do now is let's do this Cooper Company handout. Okay. Let's do this Cooper Company handout. And you folks at home work on this while they play the music, and then we will go over the answer. This is a very, very similar problem. It's just different numbers, but I wanted you to have some additional practice. So we'll see you in a few minutes. Hello. Okay, let's go over the answer. I'm not going to read through it because you just read it, hopefully. And I'm not going to spend a lot of time working through it because it really is the same rationale, isn't it? Okay, so let's take a look here. This is a situation. Zoom in a little bit there. The answer is 402,300. I should have titled that up, but that would be the estimated accounts receivable at 12/31, right? I should have put that title there. Here's the total sales. Cash sales are 20% of total sales, so credit sales are 80% of that number. And the percent still uncollected, you have to analyze the collectability pattern for a Cooper company, right? And their collection pattern is 25%, 60%, 15%. So the percent uncollected at 12/31 is 15 and 75% respectively. Take those times the credit sales and we get the total uncollected at 12/31. Okay? Everybody get that? It's a lot easier the second time, right? Okay? So you learned something today. It's been a good day. All right. Any questions on that one? Pretty self-explanatory, but I'm happy to answer questions if you have them. Okay? All right. I want to work on another one here in class. I know we're doing a lot of stuff in class, but I think I found that this is just the best way to learn this stuff is to have you do a lot of work while we're here, and then we can go over it right away. Okay? Let's take a look in your books at exercise 2214. Okay? Exercise 2214. All right? This one right here. All right? Okay, let's read through that. Ford Company requires a minimum $30,000 cash balance. If necessary, loans are taken to meet this requirement at a cost of 1% per month, paid monthly. Any excess cash is used to repay loans at month end. The cash balance on October 1st is $30,000, and the company has an outstanding loan of $10,000. Forecasted cash receipts other than for loans received and forecasted cash payments other than for loan or interest payments follow. Prepare a cash budget for October, November, and December. Round interest payments to the nearest whole dollar. Okay, this is the same situation as we did previously with, I think it was Kayak Company. Okay, interest is paid based on the loan at the beginning of the month, the loan balance at the beginning of the month. But let's go ahead and spend some time in class while they play that music, and let's just do another one of these. Let's do this one right now, exercise 2214, and then after a little while, we will go over it. Okay? See you in a little bit. Okay, let's go over that. Taking a look at the screen, okay, our beginning balance is 30,000, right? Cash receipts are 110, so cash available is 140. Cash disbursements are 120. We have interest on the bank loan, right? They say it's a 1% monthly rate. So 1% of 10,000 is 100. So our preliminary cash balance is 19,900, right? So we have to have our discussion, right? What's the amount that we have to have in there? The minimum amount is what?
30,000.
30,000. We don't have that, do we? So we have to get an additional loan from the bank of 10,100. That brings us up to a 30,000 ending cash balance. And thus, what's our loan balance at the end of the month?
2,100.
2,100. Did y'all get that? Sometimes people accidentally say 10,100, but we had 10,000 at the beginning of the month, right? So the 10,000 plus the 10,100 is the 20,100. Make sense? Okay. Any questions on January? Or sorry, October? Okay, let's take a look at the next month. All right, November. Well, this balance goes up there, 30,000. The cash receipts are 80. The cash available is thus 110. Cash disbursements are 75. Now we have some more interest, don't we? Okay, what's November's interest? It's 20,100 times 1%, which is 201, right? So our preliminary cash balance is 34,799. Is that correct? Okay. All right. Can we? Do we have at least 30,000? Do we?
Yep. Yeah.
Yeah. That number is higher than 30,000. Very good. So can we pay some loan back?
Yep.
How much can we pay back but still have at least 30,000?
4,799.
47.99. That takes us to 30,000. And what's our loan at the end of the month?
15,301.
15,301, which is the 20,100 minus the 4,799 equals 15,301. Is that correct? Okay. Okay, last month, December, beginning balance is 30,000. Our cash receipts are 100,000. Cash available is 130. Cash disbursements of 80. What's our interest?
153.
$153.01. Okay, I think they told you to round to the nearest dollar. Okay, so that's what we did. Okay, $153, 1% times 15301, rounded up. That gives us a cash balance of 49,847. Do we have at least 30,000? Yeah. So can we afford to pay some back?
Pay it all.
We can actually pay the entire amount back, right? And that still gives us 34,546, which is above the 30,000 minimum required. So what's our balance at the end of the month for the loan? 0. Okay. Make sense? Okay. Okay. Questions on that?
Yeah. Well, I've had more time to think about it, and I kind of realize it's probably just oversimplified. But if you're taking additional loans from the bank, you wouldn't be paying one interest expense on it, would you?
You don't, well, yeah, let's talk about that a little bit. If you take an additional loan from the bank, in this example, you don't pay interest, you pay interest on the beginning of the period loan balance. Let me say that a little bit better. You compute interest, like, take a look at this. Let's just look at an example. You pay interest based on the loan balance at the beginning of the period. Now, we hadn't borrowed that yet, okay? So we don't pay interest on that until the next period. Does that make sense? Okay. Now, you had asked another question when the cameras were off, and you said, this doesn't seem like a loan, right? Because think about it. Now, we did have some repayment here, but if we'd have been short here, if we'd have been below 30,000 showing the number, if we would have been below 30,000 for November, we couldn't have repaid back. We would have had to get more loan, right? And then that could have occurred for December. We could have been below that as well. So we could have easily had a scenario where we didn't repay any loan for 3 months. Now that doesn't seem like a loan that you're used to. If you don't pay your house payment for 3 months or your car payment for 3 months, you're going to be in some sort of trouble, right? This is a different situation. This is a line of credit. And they recognize that you're drawing on it and you're paying towards it as needed, okay? As needed. Now there's probably in the loan agreement something that says if you go like 9 months without paying any, principal back, maybe something kicks in or something. Okay, this is probably collateralized. There is I know in the previous one there was a limit on how much you could borrow. Was there in this one?
No.
Okay, I know the previous problem we did that they said there was a ceiling. You can't borrow any more than this. Okay, but this is not your typical loan where you have a periodic payment of the same amount. Okay.
So then what if you can't borrow up to 30,000? Or what if you can't get up to 30,000?
You mean because you've hit your loan limit? Then you're in trouble. Then you probably got to deal with secondary crediting sources, which are probably going to be more expensive.
Yeah.
Okay. So, and a good bank would advise you before you get to that point. Okay. In a way, you can almost think of this as kind of a little bit. I hate to say it because a line of credit is a natural thing and it's a healthy thing for business, whereas a credit card is not necessarily. But think of your credit card, right? You take money out or you buy things on credit as needed, and then when you have excess money, you pay it back, right? You do have to make a minimum payment, which covers some interest. But it's kind of more like a credit card, except without the exorbitant interest rate. Are you with me? All right, take a look at that one more time. Any questions on Foyert Company? Okay, let's call it a day. Does that sound good? I'm going to give you, this will be your last homework assignment for Chapter 22 on budgeting. And then next period we'll go over this homework and we'll start Chapter 23. And that will be the last chapter we cover in this class. So, this is the homework that I would like you to do for next time, please. Quick Study 2213, Exercise 22.3, 22.17, and 22.18, okay? These take a little longer, all right? I haven't given you much homework. These take a little longer. I want you to do them. Don't just, at the first sign of trouble, throw your pencil down and think, oh, Krug will show me how to do it, okay? I want you to make a good, honest effort to get all of that done. All right? Hey, we'll see you later. Have a great day, okay? Bye-bye.